We had a strong day in our biotech index. The fund was up 5.3%, mainly coming from our Crispr stocks, in particular Intellia, Editas, Caribou, also Crispr Therapeutics, and all the others also, Fate and Twist, everything had a pretty good day. I think that there's two things to say here. I want to talk a little bit about the reasons why we had so much success this year in our biotech index, and then I also want to talk a little bit about correlation of stocks and sort of our hypothesis, how certain sentiments and correlations manifest themselves in the market. This is a Not Even Wrong podcast. It's August 5th, 2021. This is Krim Delco. For the day, the fund is up 5.3%. The market is up 60 basis points. For the year, we are up 11.1%. The market is up 18.3%. We're underperforming by 7.2%. We've had a very strong day today. It is actually a reflection of what happened in June. In short, what happened is this morning and yesterday, we had earnings reports yesterday from Editas, today from Intellia, two of our CRISPR editing technology stocks. And I want to go step by step. First, let's start with Intellia. This is the most successful component of our portfolio. In terms of percentage performance year to date, the stock has by far outperformed everything else in our portfolio. We actually now have almost a 13% position in Intellia, and that is based on its very, very strong performance. So the stock has just grown in our portfolio relative to all the other stocks. The company has had a tremendous success. In June, they gave a report that showed a proof of concept that they have an in vivo technology that can deliver CRISPR technology to deliver through lipid nanoparticles. Now, I don't want to go into the weeds here. What this means is really three things. Number one, we have a proprietary delivery technology that is supposed to bring CRISPR editing technology in a living cell, in a human, to a particular tissue, in this case, the liver. So it's proprietary and it works. It has actually been able to deliver this particular CRISPR technology to deliver. Number two, it does what it's supposed to do. So the efficiency is very high. And number three, the efficacy is high too, meaning it actually not just does what it's supposed to do, but it also has the effects that we hope. In other words, the patient either had almost no more issues with that particular illness, or at least in a very high percentage of cases, the situation became much better. Now, we're talking human trials, we're talking medicine, we're talking pharmaceuticals, so everything is a game of probabilities here. Everything is, it's messy, it's not black and white. But even in a game of probabilities, even in a situation where we always talk about, well, you know, this percentage of people had a good effect and this percentage of people had not so good effect, even within that context, these high probabilities, we're talking 80, 90% efficacy, are very, very strong. That's why the Intellia stock has rallied. Let's say on the day when they announced this, which was end of June, the stock was up 50%. Since then, the stock is kind of stuck around. It's up a little bit. It's been actually doubled maybe 2 or 3 days after the announcement, and then it corrected back down and things like that. But that's normal. There's nothing to be worried about there. It's just, you know, in terms of my podcast yesterday, when I spoke about creativity, and the higher the creativity, the less predictable outcomes are, and the more also volatility we're going to have. I think this is the perfect example. The creativity here is defined as a lot of possible outcomes, not just in terms of the company succeeding with its technology, but if they succeed, then we have many, many possible outcomes also in terms of efficacy, in terms of the kinds of cures that they could apply to any kind, I mean, to many, many possible situations. We're talking here about a proprietary delivery platform. And let me step back a little bit. When I talk about delivery here, in the CRISPR space, if you talk to people like Jennifer Doudna, Emmanuel Charpentier, and so on and so forth, Rodolphe Barangou, you name it, you will hear a couple of things. You will hear that, well, it's a great technology, it's a breakthrough, it democratizes the lab experience. Lots of people have access to CRISPR technology, which has never been there before, that we can do gene editing at scale, at low cost. Those are the kinds of comments you're going to hear. But you're also going to hear that how we actually deliver CRISPR in living tissues is still an unsolved problem. And Intellia is trying to solve this problem in a comprehensive platform way. The CEO of Intellia, Dr. I think his name is Leonard, and excuse me if I mispronounced the name. Anyway, the CEO of Intellia, in the earnings statement this morning, he said that we have a platform that allows us an iterative approach towards solving problems. And I think this is what's so beautiful about this concept. It's not just that it solves a certain problem and helps patients. It is also a platform approach which allows for many possible outcomes in the future. And this is what's so great, and this is what explains the stock performance. Now, some people are saying the stock is priced well and this and that relative to peers. I'm not even going to go into that conversation, because the upside here is so tremendous. If any of this stuff actually ends up working, if we have drugs that can be sold in the market to patients, and if the platform approach works, that means that not just do we have certain drugs, but we have a plethora of potential new drugs and new ways to solve problems in vivo, which means in living cells, in people that are sick. We don't have to, let's say, take tissue out and engineer it and then reimplant it. None of that stuff. We can just simply, literally inject CRISPR, or maybe at some point even give them a pill, and they can, hopefully be cured. If that happens, the potential here is tremendous. I think we're talking 10, 20, 50x. This company can be a several $100 billion company. We look at companies like Moderna with their mRNA technology. They've already grown up to be almost a $200 billion company. There's no reason why this particular situation wouldn't even be more successful, because what Intellia announced next to this very successful in vivo delivery to deliver, also they are working on allogeneic cell therapies. This is something we spoke about in the context of Caribou, and Caribou actually was the mothership that spun out Intellia. So this is a little bit of history here, but excuse me. Jennifer Doudna and colleagues, after the discovery of CRISPR, founded Caribou, which was the first, as far as I know, the first company, the first commercial endeavor that came out of Jennifer Doudna's lab, and hence out of any kind of lab that had to do with CRISPR. And Caribou was supposed to do sort of the R&D, the high-level research and that kind of thing. And then the applied science, the applied stuff, meaning actually the, let's say, curing diseases and things like that, were then sort of bundled in Intellia, and then Intellia was commercialized and IPO'd and all that. So this is just a little bit of history, but what's really exciting here is that we have now sort of the mothership and the first child, Intellia, are coming together again. And how do they come together? Through allogenic cell therapies. Allogenic cell therapies are therapies where we have off-the-shelf cells, donor cells, healthy donor cells. We take T cells from healthy donors, and then we program them. It's called CAR-T in the space. And then we inject them into patients, into third-party patients, and hopefully they can be cured. Let's say we can attack their tumors and things like that. So this is a completely new business line for Intellia. Intellia has not been in that business, and we've spoken about this before. One of the big three drivers of our wealth generation that we hope to achieve with our portfolio is going to be allogenic cell therapy. Why is allogenic cell therapy so interesting? It is interesting because it's low cost, high efficacy. Now, low cost for sure, high efficacy, we have to see. We hope it is. If it is going to be an amazing progress in general in the medical field. So there is, to summarize the Intellia situation, a tremendous amount of opportunity, a tremendous amount of potential outcomes. We have a technology which in itself encompasses lots of potential outcomes, and this is what's so great. The approach of Intellia has always been this platform approach. What does this really mean in practice? It means that we're not just trying to solve one specific problem. We're solving certain problems in a way that allows us flexibility, iteration, and hopefully adjacent problems, and maybe even completely new problems can be solved with this approach. Intellia has always been very vocal about that. They've always been very clear about trying to solve the kinds of medical problems that they're attacking in a platform approach. So there's more potentiality and more efficacy and more efficiency in their process. Now let's step to Editas, which is a competitor to Intellia. They had earnings yesterday. The stock was already up 9%. Today was up another 20%. There was an upgrade. Canaccord went from $20 to $60. So clearly the street is catching up here. The stock is in the 40s. So they basically went from, okay, we're 50% below to we're just going to double from here. And this is perfectly fine. There's nothing wrong with this kind of approach. Again, we're talking about high creativity, high potentiality stocks here with lots of volatility, so we can't expect the street to be very precise here. The street has to be either very low or very high. I think that makes a lot of sense. Now, what is going on with Editas? Very similar story in a sense. We have in vivo, ex vivo, we have CAR T approaches. We have a little bit more focus, let's say in the Editas case, on ocular diseases. This is an in vivo approach where they literally inject CRISPR technology into your eye and solve macular degeneration problems. I don't want to go into the weeds. This podcast is not supposed to be a medical course on things like that. There is, let's say, a CRISPR investor. I've already plugged this YouTube channel several times on this podcast. I think they're going a little bit more into the weeds. If you really want to understand what's going on, there's no other way than listening to the company and talking to the company directly, to their doctors and scientific people. Now, what Editas is doing is again very similar. I think the problem with Editas, the stock has been underperforming quite a bit, and the problem there has been leadership issues. So I would say human problems, and what the street usually takes away from such issues is always, well, I guess they're not very successful. Why would you replace your CEO 2-3 times within a year or two, and then your chief scientific officer leaves? I had an episode early this year about this, when the chief scientific officer left, and I had to kind of signal, well, this is certainly not good news. But the way we look at this in the tech space, in the sort of innovation space, is always that I think leaning on the Netflix approach, which is sometimes also tasks outgrow you, and you're just not you're not the right person anymore for the task. Doesn't mean that you are, let's say, you don't have confidence in the company, or you don't like the company or any of that. Let's say you are a chief scientific officer that works on very groundbreaking new types of scientific problems, and then you solve them, and then the company, let's say, turns from groundbreaking scientific stuff into more engineering approaches, and then maybe that's not your game anymore. And I think this, for example, happened with Tesla and J.B. Straubel. J.B. Straubel is not, certainly hasn't lost confidence in Tesla. I wouldn't say so. He left Tesla before the stock went 10x, and the reason I think he left Tesla was simply because Tesla is really becoming a very sort of iterative engineering company, and it's less scientific. It's still scientific to some point. There's still technology risk, and I think Drew Balino, who kind of replaced J.B. Straubel, still has to deal with some fundamental scientific problem. But overall, it's much more of an engineering problem than before. So what I'm trying to say here is that when we have attrition, when we have people leaving, this is actually a good sign. That means the company is also moving fast, and sometimes people just can't move as fast as the tasks ahead, and then you have to replace them. Now, in the case of Editas, maybe it was also a little bit less positive, meaning they really had some issues. They had to replace the CEO. But when it comes to CEO position, I would say that there's a bit of less leeway there. I think a CEO, in my view, is more of a general manager, and if you replace them, then it's usually not because, let's say, the company is outgrowing the skill set of the CEO. It's probably more that either the CEO is just sick and tired of the company, they have personal issues, or maybe the company is just not doing that well and they don't want to be associated with failure. So there is definitely a reason to be skeptical. There's definitely a good reason to not have the stock outperform, and this is what happened to Editas. Now, I think I don't want to, as I said, I'm not going to go into the weeds here. The company has a couple of candidates which are promising. There are some good news out there. What's very crucial with Editas is that in September, they will give us more updates on their in vivo technology for macular disease, specific patient data. That is something that I think the stock could easily double or be down 50% depending on how the results come out. So this is one of those events. This is also where we at Orange Capital Partners will definitely contemplate investing in options here, because this is a perfect example where you can actually add value by having options in your portfolio. And not just because options give you leverage, but you can have real value here in terms of, because you have timing. You know exactly that at this time, let's say in September, there will be an event which will propel the stock to much higher levels, or maybe not. So this is just for people who are interested in sort of how the trading works and how you allocate, let's say, between options and stock and things like that. We think that this is a good situation. We will certainly talk about this more and explain why we, let's say, either do or don't do options in this case. But I think this is a good idea, and we've done that before. I actually started my career in the biotech space, started my Wall Street career in the biotech space, where I was very aggressively in the options space, and I this was in the early 2000s. I really saw a niche there. It wasn't very well covered by Wall Street, that these types of studies or dates where clinical studies are published, they're real big events for stocks, and they weren't well covered by the options market for various reasons. The way the options market works is more kind of backwards looking. They look at the backwards volatility and then price forward volatility based on the backwards volatility. That is much better today, where you have sort of these events priced in the options market because you have more liquidity. But in the past that wasn't the case, and this is where I made my first big bucks on Wall Street. I think this is an example. I would say these stocks are still relatively liquid. There's still just not enough coverage, not enough knowledge, not enough interest in these types of stocks, and therefore there's lots of opportunities, because no matter what, there's still 2, 3, 5, 10 billion type market caps. These are large companies. These are not micro caps. These are big companies, and maybe they're not as big as Amazon or something, but in the grand scheme of things, they're still, I would call them, relatively large companies. Now, to summarize, we have good news on the CRISPR front. The proof of concept in vivo is working. The proof of concept ex vivo is working. There is efficiency, which means we can actually edit what we're supposed to edit. And there's efficacy, which means that once we edit successfully, we actually get the result that we were hoping for. These are great news. We don't know about side effects. The big risk in gene editing has always been and will always be some very unfortunate side effects, deaths, things like that. If we had the news that one of these companies has to stop a trial because people are dying or having cancer because of gene manipulation, I mean, this would be devastating news for the sector. We could see easily a drawdown of 50 to 70% on those stocks, which would cost us probably, we could be easily down 20% in the portfolio if that happens. So there is certainly a lot of risk here. We've had a very good 2 years, almost 2 years, 1.5 years with these stocks, meaning we never really lost a lot of money. We had in the beginning a little bit of a downturn. We maybe were down 5 to 7, 8% in the portfolio based on our positions in CRISPR. And since then we've contributed quite a lot to the portfolio. Not as much as Tesla, but these stocks have been very good to us. Nevertheless, we cannot forget that these are risky stocks. Why are they risky? They're not risky because people are gambling or the management doesn't know what they do or any of that stuff. It's just simply that we're applying engineering practices to nature, and nature could react one way or the other. We're just not so sure about how the nature will react. So far, nature has done what we expected. That is also partly because I think the knowledge base is higher. We have more information. We have better approaches towards dealing with these problems. Again, efficacy, efficiency, delivery, all these things are being solved partially, sometimes even more than just partially, and that's why these stocks are doing so well. To summarize, we've had some very good news in the biotech portfolio. The main contributor of the 11% year-to-date performance has been our biotech index, which has almost, I would say, down about 8.5% of those 11. And the reason is because we have proof of concept, we have efficacy and efficiency, delivery methods working, we have continuous progress in those areas that matter when it comes to CRISPR and editing technology, and we have a lot of potential going forward. Thank you.